And then you're either going to see the most probable outcome, which will be a move up, or if the probabilities fail, then you'd see the downside move. But I would favor the upside with a target here of around. The one thing that I'm kind of eyeing is the fact that if we zoom out on this S&P chart, you have this trend line that's sloping up and then this little bit of an area right here. And so we're right into a decent resistance line right here. Now, if the Fed says the right things, we could pop as high as this downsloping trend line, which would be around just over 4,100 on the S&P 500. But I am concerned that we've already had a big rally up. If the Fed, again, doesn't kind of give the market that pause after a hike, then I think we're headed very quickly to the downside. And it still concerns me, honestly, that we haven't even retested the pre-COVID highs, right? The February 2020 highs on this market. We came close, but we didn't get there. So for me, I'm more inclined to think that it'll be a whippy November, but it wouldn't shock me if at some point we see a down November overall.
Hello everyone and welcome to the Daily Crypto. We are back with yet another video, and this time we have the professional market analyst and trader Gareth Soloway with us. He is going to share some of his thoughts on the macroeconomy and where he thinks the Fed is going to take the markets. Gareth also reveals his trading plan for Bitcoin, so make sure to watch the full video because it could be a great opportunity for you to make some profit after experiencing so much pain. But before we can continue with the interview, let's take a quick look at the fear and greed index for today. As of recording this video, it is sitting at 30, which is the same as yesterday. This is partly due to the fact that most investors are sitting on the sidelines waiting for what the Fed has to announce in the upcoming meeting. Currently, Bitcoin and Ethereum are trading for $20,200 and $1,508 respectively. With that being said, let's continue with the rest of the video. While the S&P 500 has had a small bounce to the upside, its sustainability depends on what the Fed announced in the FOMC meeting. If they indicate that they will be providing some sort of a relief to the markets, then we could easily see it rally all the way up to the 4,100 mark. Otherwise, it is almost certain to fall back down and potentially retest the COVID lows. Now, it is a very big drop to comprehend, but the likelihood of the S&P 500 reaching those levels is pretty high and is certainly in the cards.
I think Meta's in a particular situation, and what's so fascinating about this is to compare it to Snapchat, right? So Snapchat had horrendous earnings as well, dropped like 25-30%, but then a few days later, it rallied back basically to $10, about 30% or so. And initially, when Facebook reported just the numbers, the stock traded to 141 from about 130. And then all of a sudden, we saw that Zuckerberg was still going to be spending $10 billion, and the stock just tanked, right? So what this tells me is that their core business is still, basically the valuation where we were was fine for the core business. It's this spend crazy kind of atmosphere where the market does not want it. In a bear market, people are not going to give it 10 years to produce, right? In a bear market. Now, in a bull market, what's fascinating is we've seen all these hopes and dreams give crazy valuations, but we have to remember that it's a difference in types of market. And right now, investors are not giving more than a year out.
Meta is one of the few tech stocks that Gareth thinks is available at a good discount, as it has dropped by more than 60% from its all-time highs. He points out that whenever a lot of investors are bashing on a particular stock, it is always a good idea to look into it because chances are it will reverse course and will go back up as soon as some good news hits the markets.
I'm in the camp where I do expect some sort of big technical bounce. And I think one of the things that as a trader, and number one, as a trader, we have to look for technical levels, right? So one of the things I'm seeing is there's a ton of support right in this level, right around $86 to $87. So it's not that far away, another $7, basically another day like today, and it would be almost there. But that is going to be basically taking you back to this consolidation period before the breakout that continued, you could arguably say all the way into last year was basically that's when it started. So this would be what I would consider to be kind of a retrace to the beginning. And also, if you look at the valuation of Meta and what it was producing back in 2015, you can't argue with the fact that the company is much more profitable, much bigger than it was back then as well. So there's a lot of value here. And I do think that people are at the point of just kind of throwing the baby out with the bathwater. And if Zuckerberg, if he just gives even an inch to this market or to the investing public and says, hey, listen, we're going to buy back, $5 billion a year and maybe only spend $5 billion or $7 billion on the metaverse, you could see a massive, massive short squeeze in this name. So to me, I love opportunities like this. I mean, this is where, as an investor, yes, there's risks, but you've discounted it to such a level that it's basically there's no expectations. And when there's no expectations, it doesn't take a lot to just outperform.
Gareth believes Meta will retrace back to the point from where it started its huge rally, and that will be the deciding factor of where it's headed from there on. The biggest difference between back when it started to rally and now is that Meta's valuation is much larger and has more people talking about it at the moment. It will only take a small move for investors to notice the massive potential that Meta has in terms of price action.
The market is rallying and we're well off the recent lows on the hope that he's going to pause. So we're not talking about a real pivot in that he would start to cut. That's not going to happen. But the market just wants him to step back for a few months and reevaluate the data for like 2 or 3 months in a row. And so I think that's what the market is hoping for. And if he does do that, I think you see a bounce or a pop in the markets on Friday. If he still talks about raising in December another 50 or 25, I think the market's going to get pretty scared again that he's overdoing it, and you're going to be pushing this market into potential major recession, not just minor. Minor's kind of the base case at this point for me. Yeah. It's a matter of how bad does it get, because again, we haven't even, he's raised now 375s, probably 4. You could argue that maybe only one of those rate hikes has filled into the economy at this point. And so there's a lot of filtering that needs to go on, and we have to see where the economy stands at that point. And that's scary to me.
Since the Fed is going to increase rates by 75 basis points for the 4th time in a row, the markets are in fear once again because we haven't fully seen the effects from the previous rate hikes, and here is the Fed raising rates by another 75 basis points. The turning point would be if they announced a slowdown on interest rate hikes by raising rates by 25 or 50 basis points. This move would signal that the Fed has started to pivot, which will boost the financial markets once again as investor sentiment will strengthen.
And basically what we have on Bitcoin, we had a breakout that occurred about 10 days ago here, right? So we had this beautiful downsloping trend line. And this is something I was expecting. I think last time I was on, I said we might go as high as 22,500, maybe 25 on this pump. But it was all predicated that we would break out of this channel, right? Or this wedge pattern. And that's exactly what we did. And now what you're getting here, after we got this 2-bar move up, we're basically seeing sideways chop. Well, as of now, that sideways chop is called bullish consolidation. And what's interesting is it's consolidating into the Fed on Wednesday. So my guess is we're going to stay sideways choppy into the Fed on Wednesday. And then you're either going to see the most probable outcome, which will be a move up, or if the probabilities fail, then you'd see the downside move. But I would favor the upside with a target here of around 22,500 near term. Maybe max upside would be 25 over the next month or so into year end.
Gareth expects Bitcoin to make a move to the upside, potentially testing 25K level, but it all depends on what the FOMC meeting archives on Wednesday. It has already broken out of the wedge pattern in which it was consolidating for a long time, and Gareth expects it to touch at least the 22,500 mark before we see another move to the downside.
I still think that they're working with yesterday's news in terms of the inflation levels. I've been very shocked, to be honest, that they haven't discounted the strong jobs numbers more. Maybe it's just because the inflation data has stayed so strong that they're willing to not play into the jobs data being a lagging indicator. But I do think that at this stage, they're going to find themselves, and you saw, there was like $1 trillion that investors had kind of squirreled away for spending during COVID and after COVID here, and they paid down credit card debt. If you look at the recent credit card numbers, credit card debt is soaring again. And so what you're seeing is an investor or the citizens of the US at least that are at a point where they're getting back to their levels of debt that they were, and they will have to be cut off, or they will cut themselves off at some point if the economy starts to weaken significantly. So I am concerned that I think the Fed again is going to overdo it, just like they they overdid it with stimulus and thinking it was transitory. I think they're going to overdo it here and then have to play catch up. And honestly, wouldn't shock me to see interest rates go down in late 2023 or early 2024.
Since the Fed is so committed to fighting against inflation by hiking interest rates, Gareth believes they are going to go overboard once again, just like they did with printing money and handing out stimulus checks to the citizens. It is also noteworthy that U.S. credit card debt is soaring once again to record highs, which indicates that the consumers are starting to struggle to keep up with their lifestyles.
I do think Ethereum would go higher, and if I show my chart, I'll show you where. So it's going to have some interesting levels, and if you take the all-time high on Ethereum going back to November of 2021, and you stretch a trend line right here, you actually have Ethereum just underneath that level. And that's going to be the big test for Ethereum. If it can get through there, you've got some potential solid upside north of 2,000. But I think as a trader and an investor, we have to really be watching this. Like, it's right around 1,680 bucks. You got to see, can it get through there? If it does, you got quite a bit of upside at minimum back to this double top right here, maybe even higher. But right now it's stuck below resistance. Maybe the Fed news will push it through that level.
Ethereum has stayed relatively dormant for a while now and has been consolidating in a wedge pattern for several weeks. But Gareth thinks as soon as it breaks out, we could see it touching the $2,000 level or maybe even higher. But once again, it all depends on what the Fed announces in their meeting. Thank you for watching this video. Make sure to hit the like button and subscribe to our channel so you can continue to watch informational videos like these on a daily basis that will help you informing informed decisions so you can profit during these tough times. See you guys in the next video.